Live from Rockville Center, New York. It's PPNY, the Property Professionals of New York. I'm Ryan O'Neill Williams, your host and the Chief Marketing Officer of PPNY. Sometimes I forget. And I am with one of our premier members here at PPNY. It is Eric Forte of Prudential Borrowing, and he is in Rockville Center, right?
Yes, sir. How you doing, Ryan?
That's not the only place you serve. You serve like a much larger area, correct?
Well, we're licensed in several other states: New Jersey, Connecticut, Florida, Georgia, Pennsylvania. The majority of what we do is in the New York area, a little bit more in the tri-state, and Florida, of course.
Okay. And exactly what is it that you do? Eric, let everybody know.
We are a full-service mortgage company. We're a mortgage brokerage, so we're not a direct lender. We place loans. We're online with over 40 different lenders for residential. We do commercial lending as well. We're on with a good 20 lenders for commercial lending. And what we do is we fit people to the best loans for their needs.
Okay, great. So it's mainly a financial. You're saying you're full service, but you also provide the majority of it is financial. You basically figure out
mortgage, what you qualify for, what the best mortgage products are for your scenario, and basically getting you the best rates and service that we can.
Cool. So let's see. How did you get into that? Was this a family business passed down? Were you just one of those guys who loves to get into this kind of business?
So Prudential Borrowing, we've been in business for 14 years. I've been in the industry for over 20. I started back in college. This was back in subprime days, 2002, and had a couple of friends in the industry doing very well. They brought me into it and started out telemarketing, for refinances back then. And after several months, became a loan officer, and then kind of just kept growing from there.
Growing until you actually built out your own business.
Yeah. We opened up in 2008, right actually after the world is crashing down around us all. And my partner at the time didn't want to go to work for another company. He's like, "Why don't we open up our own company?" I thought he was absolutely insane, which he was. But I was young at the time, 20 or younger at the time, 26, I believe I was, and so I have nothing really to lose. Why not? And we did it, and we're still here.
Got to tell you, there's a lot of doom and gloom about our current economy. And I say to people all the time, this is not the time for you to pull back. This is not the time for you to worry about making big moves. Now is the time to get creative and figure things out. I'm telling you, there are two types of people in a recession, right? Or because that's what you're talking about. 2008, you have either opportunity or pulling your hair out.
You're feeling aggressive.
Yeah, and you went for it instead of going conservative. And that's right. To some extent, if you got a family, you got kids, there's a whole different kind of pressure to lose the shirt off your back than if you're a 26-year-old who does not have that yet, right?
Yeah, I mean, you can say the market we're coming into is similar in some ways, not necessarily the housing market perhaps, but the economy overall, where people are definitely getting more fearful, and probably the more to do or well-to-do are probably going to start getting more aggressive.
Yes. Yeah, that's exactly what I'm talking about. Let's talk about that. What are the trends going on in 2022 and that we should probably look out for in 2023 as well?
So 2022 can really be broken into two halves. The first half of the year, we were still in a very, very strong purchase market, stronger than we've seen probably ever in history. I know at least over my 20 years, it's the strongest we've ever seen. And that kind of, was say by low interest rates, high demand. The demand is still high, but interest rates have more than doubled over the past 12 months, which is causing issues for affordability for many home buyers, causing a lot of fear for many home buyers. We're starting to see values dip in the housing market. Hasn't been drastic, I don't think it will be. We just are coming off a 20% increase year. So we're down 6% or something over the last 2 months. So you're still up 14, when you see the media, oh, we're up still 14% year over year. Well, we're down 6% month over month. It's just we were up 20 before. So we're in a different now. Now demand is starting to dry up. Not necessarily for lack of need. We still have more people that are in the home buying range or first-time home buying range than ever. Your typical 32 to 37-year-old, that spike in births was higher than the baby boomers. So we still have a lot of demand. The fact that interest rates are high and there's crazy things going on in the financial markets doesn't change the fact that if you're 35 and have 2 kids and you're living in a 1-bedroom apartment, that you need more space. Yeah. You may wait, or that might give you a little time, but that demand is still going to be there. Right. So I anticipate next year that demand still being there. A lot's going to depend on interest rates. I personally believe interest rates are going to drop in next year. I think we're kind of towards the top of where interest rates are going to be. Which on mortgages in the upper 6s to low 7s at this point, where we were in the upper 2s this same time last year. Yeah. Yeah. So that's a big shock. It's even if rates don't drop drastically in the next year or just stay level, it's very hard for people to make big buying decisions when, interest rates have doubled in such a short period of time. Right. If interest rates were 6% in the last 5 years and they went to 7%, it's the same numbers, but it wouldn't be as much of a shock to the system.
What I'm smiling at and what people don't realize is that when I do hang out with Eric at the PPNY networking meetings, these are the kind of conversations we have. Like, there are so 10,000 foot, I see the whole thing and what's going to be happening. So if you ever come to a PPNY network open meeting and that's what you're into, you really want to get an understanding of what's happening in the real estate market, this is the guy you're going to hang out with, right? This is the guy you're going to hang out with.
Before the networking events get to me before I get to the bar.
That's right. He's the Maradona. Like, he sees it before. It's very, very different kind of convo.
Well, we don't know. We'll have to check back in 6 months and see if I did see it before.
Well, see, I'll help you out. I'll delete the video
if it's wrong.
If they're all wrong.
Well, we can record the video twice, and I'll say the complete opposite.
That's right. Let's do that. Like, right now.
Like, when you have a team winning the World Series or the pennant, they print those shirts.
Right.
There you go. Can't be wrong.
That's right. Can't be wrong if you do it twice. Let's just put the right one up and figure it out from there. All right. So, speaking of PPNY, how'd you get into that group? And for those of you who are listening for the very first time and or just big fans of Eric's, Property Professionals of New York, or PPNY, is the networking group that we have where it's specifically built for real estate professionals, mortgage professionals, property professionals, people who are involved in the sale and or transfer and purchase.
Ancillary businesses, accountants, financial advisors.
Yeah, exactly. So it's money, it's property, it's who cares for the property, it's everything in between that basically you would need to know about or figure out if you're making a purchase or you're going to be selling, or you want to work with those kinds of people and get referrals, okay? And trusted people as well. So that's our group. How did you get involved in PPNY, Eric?
So actually, my wife was involved first in PPNY. My wife's a real estate agent out of, she's in Franklin Square in the Douglas Elliman office, and she had joined PPNY. And then she brought me into PPNY. And she recently has, she's moved on from being a member of PPNY, but I'm still here, probably about 4 to 5 years now.
Yeah. And particularly, what is it you like the most? Because I see you hanging out all the time. This morning, for those of you who don't know, and this is going to date this a little bit, they had a Halloween meeting over at Rockville Center.
I wasn't sure. I had the ghost tie on. I was going to keep it on, but then I remember you're not playing it this week. So.
Right. So I know you enjoy yourself. I've hung out with you. We've hung out at Salt Shack a couple of times. That was a wild night. But why do you like PPNY and hanging out in PPNY?
So it's, I like having the access to other professionals in the industry who are knowledgeable and who you can trust to refer clients to. That's always very important because, after doing this so long, and anyone who refers people realizes referring someone is, just as much about your reputation as theirs. If you refer someone who's poor, even though it's not you doing the service, you get blamed for it.
Yes.
And you also get the credit when you refer someone who's good.
That's right.
So, we have a good group of professionals who are good at what they do.
Okay.
And it's also great to kind of lean on these other professionals in whatever industry. Like we were talking about insurance industries, and everyone's getting their insurance bills and they're going up. So we were talking to our insurance professionals this morning about why they're going up. We see that stopping in the future. We talked a little bit about mortgage interest rates and where they're going, and different programs in the industry that could perhaps help with clientele. So we always get into good conversations about what's going on in the industry. We meet once a week approximately, whether it be at a breakfast meeting or a luncheon. It's some of these other groups have, if you have to make the meetings every week, we don't necessarily have that rule. If you're an active individual, it's sometimes not feasible to do so.
Right.
And the secondarily is we all refer to each other business, and that's of course a secondary, or for some perhaps a primary reason to be part of the group.
Yeah, it's great. I'm enjoying conversations about being an entrepreneur recently. I was talking to Paresh Shah, and the conversation about why we chose to do what we are doing, and how we are, in a way, changing the world and or assisting people with their problems. Yes, it's for a profit, but that's really what you do. And it's not like we're out here just taking advantage of people. It's, hey, you've got an issue, and we're going to help you fix it. So speaking of which, who comes to you, Eric? What problem do they have? How do you solve it?
We do both. I mean, I can give you just some recent scenarios of things that are going on. First-time home buyers often, probably some of the more difficult loans or more work-intensive loans to do sometimes with first-time home buyers.
Okay.
I also feel personally the most rewarding, because you're helping someone really change their lives.
Right.
So first-time home buyers, just for advice, a lot of these larger lenders, Chase, Wells, Citi, and our rates are right in line with all of theirs. But they'll not necessarily spend an hour on the phone with a first-time home buyer explaining the process and the closing costs and how the market works and what's going to be the next steps. I always joke whenever I have a first-time home buyer call, and I usually spend about an hour on my first call with them. I always joke that at the end of this phone call, you are either completely not going to want to buy a house at all, or you're going to be ready.
Yeah.
So for the majority of the time, they're ready. But the real estate or referral partners who do refer them to me, I also tell them if they came from a realtor, don't tell the realtor I said that.
Okay.
Which I just now admitted on broadcast.
Why do you think they choose to go with you instead of some other company? Why is Prudential Financial best?
Like I said, our interest rates are on par, if not lower, than a lot of the large lenders. And we have 10 loan officers. All of our loan officers are very, very, on top of giving the service, providing that service, answering the phone on weekends, making sure their numbers are done properly so that you don't end up with a disaster somewhere down the line. And we pride ourselves on that, and we make sure that our staff is on top of that, because we want that reputation, which I believe we do have a fairly sterling reputation. More in the Long Island and New York City market. Obviously, are licensed in many states, but still probably 80% of what we do is much more in the localized market because we're physically here. I do have some loan officers in Florida that's more their market there, but
that's right.
And other scenarios are just hard to get done scenarios. Maybe something, I've taken in 2 loans this week that were denied at other lenders. Either they didn't have the product or it just wasn't structured properly.
Right.
They went to, I have someone who recently went to Chase for a loan. They tried to do a regular conventional loan for them. Meanwhile, they were a veteran and they had a disability which waived the VA fees. So a VA loan was just much better for them, and they just got poor advice.
What, they just didn't ask? Is that what happened? So
the client didn't necessarily know that. We'll ask them, and the loan officer just didn't go into it. I have no idea why.
Okay.
And that's a loan that someone could have done. I have another loan we tore this week that has 648 FICO score that other lenders weren't able to do because the score was too low, and we have a lender that is able to do that loan.
Okay. Great.
So, we have a lot of different products. Again, a lot of what we do is your typical, perfect credit scores, good down payment. They're just looking for best rate, best service, which of course we provide. And the other part of what we do is, hey, I couldn't get my loan done somewhere else. I was just on the phone with a client who's doing a loan for a non-warrantable co-op. I won't get into the nitty-gritty of what that means or what it is, but basically other lenders can't lend on that co-op building, and we're getting him a loan. So yeah, that's probably the smaller amount of stuff. That's why someone would come to us. But the majority of it is just better service, better rates. Commercial, same thing.
Yeah, and see, there you have it, people. So they want to get a hold of you. Where are they calling? What is the website? Where do they need to go?
Most of our business is organic. Word of mouth. Previous clients, a lot of previous clients. Most of our loan officers get a lot of their business from previous client referrals. Mm-hmm. Of course, realtor, lawyer, financial advisor as well. We do some mail marketing. We have in the past for refinance. We've done mail marketing. Refinance markets are fairly dried up at this point, unless there's a real need. So we haven't been doing too much on that level. We're doing some marketing online. We're actually building a landing page for adjustable rate mortgages. We're seeing a big trend that clients are requesting adjustable rate mortgages over fixed for the 1% to 2% lower interest rates, especially since we're coming into a market where we do believe interest rates will drop. If you're taking a 7-year or a 10-year fixed loan, most likely you're not going to have that loan for 7 to 10 years. You're going to refinance probably in the next 2 to 3 years. Ryan, did I lose you? Oh, there you go.
No, not at all. It was just
we have.
You were going into it, man. I wanted to focus.
Yeah, so I actually do recommend adjustable rates. They're not like back in the subprime days, subprime adjustable rates. These are regular government loans with good interest rates that are fixed for a long period of time. The goal would still be to refinance out of that, and if someone's not comfortable with it, I definitely suggest just going with a fixed rate. Right. Another trend that I've been hearing a lot about, I don't love it as much, is a 2-to-1 or a 3-to-1 buy down program, which are very new. They've been around, but they have never been marketed like I'm seeing recently. The 2-to-1 buy down, just to give a quick definition of it, is basically if you qualify for a 7% interest rate, which they're around 7% now. In year 1, you'll pay the interest of a 5% interest rate. So for the next 12 months, you'll be paying the payment of a 5% interest rate, then the payment of a 6% interest rate. Then in year 3, it goes back to the 7% interest rate. Now, the rate doesn't actually change. What you're doing is you're getting a seller's concession to cover the interest for that first year and second year. So you're getting like a $6,000 or $7,000 or $10,000 seller's concession just to prepay your interest to make your payment more comfortable.
Yeah. So it's a discount.
It's like a discount, which to me, I don't necessarily love. I would say, if you're taking that, you're still going to end up with that 7% rate in 2 years from now. Mm-hmm. You're probably better. And I feel the lenders that are offering those probably don't have good adjustable rates, which is why they're probably marketing that more. But if you can get a 1.5% interest rate lower for a 10-year term, why would you do that, per se? You're going to end up with that 7% in 3 years. You do it because, well, you're going to refinance in 12 months, and we know that.
Right.
You're going to refinance in 12 months. Why not take an actual lower interest rate that has a longer term of security behind it?
You're looking at it from a marketing perspective. From my perspective, I know exactly what they're doing. It's a shiny object. It looks great. Yeah, and they take it. But the idea is,
I try to pull some of the punches when it comes to talking about competitors.
Yeah, which I love.
We do offer the 2-to-1 product also, perhaps if it's an FHA loan or you couldn't qualify for one of our other products.
Right.
I would maybe recommend it. Yeah. But the truth is you still have to qualify, and you have to be comfortable. And I say with the adjustables too, you have to know that there is no guarantee. Right. That you can get refinanced in 2 to 3 years.
Right. You're saying it could be something else entirely.
Well, it could. I mean, rates are almost, I mean, I'd say 95%. I mean, there's a great chance that interest rates will go down. Of course, I have no crystal ball, but who knows where you'll be? You may have a different job. You may not have a job.
Yes.
You know, so that being said, I like the 7 and 10, especially the 10-year arms. You know, that gives you a real long period of time to navigate what you're going to do.
Okay, cool.
But yeah, anyway. You know,
he's like, anyway.
And 6 months ago, why I see the market is so different. 6 months to the previous year and a half before that, 2 years before that, I was telling every client, take a fixed rate. Rates are 2.75%, 3.25%, 2.5%, even 3.75%. Take a fixed interest rate. There's no reason not to take a fixed. You know, rates may go back down in the future when a heavy recession or who knows what comes down the line.
Is this the wildest upheaval since 2008 that you've ever seen? Like, it's part of the pandemic. It's part of everything else that's going on in the world.
It's different. It's different
from that.
It's very, very different. In 2008, we came off a period of also very, very heavy home buying, but very heavy subprime home buying.
Okay.
You had lots of clients doing loans with no income checks. You know, not on a commercial. We still have some no income check loans for commercial clients for you know, investment properties perhaps, but not for someone who's buying their house to live in. So, you know, that has changed drastically. A lot of the adjustable rates given back then were 2-year fixed rates, adjustable thereafter, to clients who didn't have proof of income. And then when the mortgage market shifted and those products left, they were left with Fannie Mae, Freddie Mac, FHA that you needed to prove full documentation of income for, and they weren't able to refinance, which just caused a domino effect of foreclosures and property values dropping. Right. We're in much the opposite. And also supply and demand was a different point then. We were coming off one of the lowest housing birth spikes, lowest birth spikes in history.
Okay.
So the supply and demand issue is much different from what we have now. Builders were still building like crazy, and they didn't have the buyers to buy it.
Yeah.
Now we have the buyers to buy it because we had that, like I said, that 35-year-old still needs to buy a house. He may just not be buying right now because the system got shocked. They'll still be here in 2 years. They'll just be 37.
Listen to me, people. Did you hear how he went to birth rates? Like I wouldn't even have thought to put that in, but of course it makes sense.
You have to know your analytics.
If you've got more kids, then you want to have a larger place to live. You need to have a different kind of home that you would have to have. And as people, you know, families change, they need different things. So yeah, didn't even cross my mind. And that's the kind of conversation that you're going to have if you show up to a PPNY network meeting and want to hang out with Eric Forte or anyone there. You have anything special you want to tell them right before we go, because we're going to close out, Eric?
No, not at all. You know, obviously, if anyone has any questions or needs advice or you know, predictions, someone bold maybe, you know, you can always reach me. My phone number's in the bottom. You can email me, call me. I love talking about this stuff, obviously. So I'd always be more than happy to have a conversation, or come check out a PPNY meeting. We have open. When is our next open meeting?
Right now. See, I'm trying not to put it in here, but I think our next open is next week, the 3rd, and November 3rd, and the next one after that is November 17th. Eric, are you trying to do my job? You better stop that. Ladies and gentlemen, I want to say thank you so very much to Eric Forte of Prudential Borrowing. If you do need to get a hold of him, it's 516-208-7455. If you're a first-time home buyer, you're trying to get a hold of something, or if you're an experienced one as well, or you're a commercial person trying to flip, this guy's got all the answers, and he can see the long view. It's very important to get that done, especially in what we've been coming out of what I consider a volatile market that changes every 6 months. That's wild. That's like my business. Tech. You know, digital marketing changes every 6 months.
That's the housing market right now, and it's scary.
Yeah, that's the housing market right now, which used to be completely. You used to go 4 or 5 years before you decided, oh, okay, we've got different. Now it's every now and then it turns over. So yeah, thanks again for coming, Eric. I hope you enjoyed this. Did you have a good time?
Had a great time, Ryan. Hope to do it again soon.
Yeah, very well. All right, ladies and gentlemen, I'll talk to you soon. Thank you so very much, Eric. You guys take care. This PPNY, we mean business.
Have a good day.